Well, good morning. Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Here it is Thursday. That means it's weekly export sales day. And we did, in fact, get those numbers, and I want to help analyze them with Brian Hoops. He is with Midwest Market Solutions. He's in Springfield, Missouri, and let's go to Brian right now and reveal the numbers. They just came out a little bit ago here, Brian. Not too bad. Let's take a look at the total table of export sales last week. We'll begin at the top with the corn. 1.17 million tons that were sold last week. Let's take a look at the soybean total. And by the way, this is for the period November 4th through the 10th. Now, the soybeans came in at 3.03 million tons last week. That's one of the bigger ones I can ever remember. Soy meal, 267,100 tons. Soy oil, 400 tons, and then wheat at 290,300 tons. Can you break these down for us?
Yeah, Marlene, good morning. These are some really outstanding numbers, and if you think this is a good corn number, about 46 million bushels, just wait until we get next week's numbers. The ones that we've seen, private export sale announcements for this marking year to Mexico so far this week, we're over 58 million bushels sold just to Mexico. So it's going to be a very strong week next week as well. But soybean number at 111 million bushels, an outstanding number. And Mexico has become our best friend. We are looking at big sales here to Mexico for both corn and soybeans. They were our number one buyer. And if we talk about beef and pork, they are also a really strong buyer of U.S. beef and pork markets. So Mexico continues to be a great buyer of U.S. commodities. And notably absent was China from a lot of these export numbers. They were big buyers of soybeans this last week. But, they have not bought much in the way of pork, beef, or corn or wheat, for that matter. It's just mostly soybeans at this point in time.
Do they normally buy corn by now?
Yeah, last year at this time, they were very aggressive buyers of U.S. corn products, kind of stockpiling some corn, and they've really not shown up to be that buyer so far this year. Now, one thing that we are starting to hear is river levels starting to rise just a little bit, and that's bringing barge freight rates down, which will make us a little bit more price competitive. So, there's two things that really were holding back our exports. And that was a lack of a crop threat in South America, which we're starting to become more and more concerned about Argentina as a problem area, plus these barge rates being so high. But both of these areas may be starting to show up a little bit as far as barge rates falling, which would increase our exports, and Argentina continuing to have dryness stretches here, dryness concerns that would also increase U.S. exports.
So we had wheat exports at 290,000 tons. What do you think of that?
Well, wheat exports have been pretty dismal. That's about 10 million bushels. It is above the pace that we need to be at to reach the USDA forecast, believe it or not. They have our export numbers it's similar to last year, around 775 million bushels for the entire year. So we don't need to be exporting a lot of wheat just to reach that number on a weekly basis, and we are not selling a lot of wheat. It's a poor number. It's very similar to what we saw a year ago, but again, it's in line with expectations, in line with what the government says. So it's just kind of a matter of can we maintain this pace? If the dollar breaks enough, does that stimulate a little bit better demand, similar to what's happened with the corn market, where it's fallen to a price level that is stimulating that better demand trends?
Let's take a look at the corn overnight, and on our quotes provided by Bar Chart, well, we had December corn down 7 3/4 at 657.5. It was a downward overnight session everywhere you look, basically. We had January soybeans down 11 at 14.18 1/4. Moving on to the the Chicago wheat. We'll do that first. Down 16 at 801.5, even though it did probe as low as 793 3/4. Kansas City wheat last night, December, down 9 at 946.5. And the Minneapolis spring wheat trade had December going down 6 at 959.5. Does this mean that we have a potential for another leg down in the entire grain complex, do you think?
Well, it possibly does. The one thing we haven't talked about this morning was news coming out overnight that they've extended the grain deal to ship products, egg products out of the Ukraine, 3 different ports from the Ukraine through the Black Sea region. That's been extended for another 120 days. And that's what really set off the selling pressure against the corn, the soybeans, and the wheat market was just that deal being extended. Now it remains to be seen if it will be honored. And we started to rally back off the lows once these export numbers were released. So it could be an interesting day, probably a very choppy type of session, lower bias certainly because of the corridor agreement being extended. But I don't know that we're going to see a big sell-off in any of these markets because these export business and because the basis levels that are starting to get stronger, not weaker, as we go through November and into December.
Something else to keep an eye on. Look at this dollar index value, December 933 points higher at 107.085. Yikes. Okay, we'll come back in a moment. We'll take a look at the beef and the pork export numbers right after this. All right, now we did get the beef and pork export sales numbers this morning as well. And let's see what USDA said we had there. Well, the beef actually perked up just a little bit to 17,200 tons this past week. And the pork number actually improved a little bit too. It was at 26,200 tons. Although, Brian, you and I were talking a little bit ago, I don't see China in there as much of a buyer of either one of those. It looks like what? They picked up 500 tons of beef and that was it?
Yeah, it's kind of a disappointment that they did not show up as a buyer of U.S. pork. It's Mexico that's the big buyer of beef and pork sales this week. So, we've kind of been relying upon China to be our number one buyer of U.S. pork, and that's really not been the case here for the last couple of weeks. Our pork sales have trailed off. Now, this is a rebound in pork compared to what we saw last week. That was a real dismal sale, but really it's on the strength of Mexico being an aggressive buyer here. So, the beef sales, nothing to write home about. We're hearing cash trade in the plains as well as on a dress basis, fully steady with a week ago. Of course, tomorrow you have the cattle on feed report that looks to be friendly and supportive to the industry. Meanwhile, the hog market, cash is kind of weak through here, and maybe part of that has to do with the slow sales that we've seen on the export front. But the cash market's trailing off. If the markets start to weaken, taking out yesterday's lows, for example, there may be a lot of selling pressure coming into the hog market after a consolidation type day yesterday with an inside trading session.
Yesterday, we did have the hogs closing 25 higher on the December contract. They were at 85.57 yesterday. Just to recap on our live cattle trade, when we finished up yesterday's session, we had that December contract up 52 cents at 151.80. February was up $1.20 at 154.25. On the feeders, well, we finished up with the January contract 45 cents higher yesterday. We'll see what they do today. Brian, thanks for the analysis. Appreciate that very much. Brian Hoops of Midwest Market Solutions. Suzanne, with that, I will turn it back to you.